Hey guys, welcome to this video. I'm going to run down on the pound US dollar here today. That's probably why you're all here, waiting for that employment data that hopefully will give us a little bit of a move in the markets. I've been trading the FTSE this morning quite a lot and really just using risk management methods to trade it to the upside. So what we're going to talk about today is the pound dollar, where we're at, and a couple of lessons that you can learn from that as well. As always, if you do want to get on board with myself, I trade every day. I teach lots of people to trade as well. Just jump in the description of this video and you can get on for free and we can go from there. So let's jump into it, guys. I'm going to recap on the pound because I've not done an analysis for a little while. But just so everyone's aware of what happened before, what happened now, and why we're here. And we spoke about it many times. We said this is going to fall, it's going to be short. Okay, you shouldn't be buying it. And that's exactly what happened. I mean, we called that. You can, again, I say it pretty much every time. Go back on my profile, look at that currency pair video I did. You can see we called it various different times to the short side. So now you've got a fall. Okay, you're looking at gains. If you did short it up here, okay, you want to make sure that you're killing that trade now. You've got to be out because you want to bank those gains. Now, why did we look short? Well, we hit into key resistance. Okay, we already had a massive move up, 104, all the way to where we are. Okay, that was unsustainable as a low price. And there was all the problems at that time with the mini budget. That's what brought us down. We knew it was long because the price has already been smoked. Okay, 142 to 104. So we're inferring that, okay, well, that's a low price. That should be obvious. Gets up, we exit, kill the longs, we buy dips, kill the longs, and we trade it up from 104 to 124. Okay, and we say, okay, well, that's enough for now. We're out of that. We've got our money and we've killed it. And then you just decide, okay, well, we didn't quite reach the moving averages, but we have come up a considerable way and we're going to be out. And hopefully you are. So you killed it off for your long gains. Great work. You looked for short zones. You rammed right into key resistance up here and you fell down. So now you need to swap to a lower time frame like the weekly. Okay. Now you can see that the body of this candle is very full and you're tearing down. And also the second part of what you can see is that you don't really see any key resistance, really, sorry, key support on the way down, a little bit early today, until around here. Now, I would, and this is exactly how I trade it, I would hold off until you get slightly lower to this point. So around your 1165 is ideal for risk averse longs. But you can see there's a candle wick here. I wouldn't say it looks incredibly promising, but anything starting to scale into the long side down in that 116. In fact, you can actually drop lower again. And you can just see, just look at this candle, guys. Can you see how bottom heavy it is? Okay, that gives you early indication as a trader of where the market is going and why it's pulling down. And if you use your daily, you can see along this line, you've got reasonable early support. So I would say once you get down here, okay, that 1165 area, that's okay for longs because you're going to be pulling back in your up move. Okay, and it's therefore likely you'll get a bounce. Now, it's easy to look at this and infer that because you can see it's a reactive level. The price has stopped here before and it shall do so again. That's just how the markets run. So if you wanted something lower, and you're even more risk averse, okay, you might not get the trade, but if you're someone who's sat there and doesn't really care if they get it or not, as long as they get a low price, you would be looking lower. And you can DCA in at that point as well. And once we get there, we can judge where the market sentiment is because you can obviously see this candle forming now is pulling down quite sharply. And you can't really see anything significant in the way apart from this minor support there. So I would really look to the long side once you get key support. You probably get a bounce at your 1174, but key support really is lower 11625 or 1163. That is going to give you a good low price and nice entry for a rebound or a bounce. So what you're doing is number one, you're looking at how fierce that candle is pulling down, okay, whether it's sharp, and you can drop even lower to 4 hours. Can you see how this is just pulling down? It's really close to the close. and the close is getting extended and extended as the market goes down, the dollar gains value. Okay, that's how you know I'm looking for basically a small rebound on lower time frames. Entry confirmation effectively is the method I'm talking about here. I won't go too in depth because that's what people really pay me for. But with moves like this, really full body candles pushing down to that downside, you're looking for that entry confirmation. So you're using those low time frames. If you're going to scale in at early weak support or early minor support, if you like, you could take it really small. That's your 11726, but it's going to have to be tiny. And then you're looking 1163 for much more risk averse longs. You can have a mid to normal size on that because there is a good level of support there. It's likely the market, therefore, is going to react and rebound, and you can hold off. So the point today is you don't need to load in early. You don't need to take every single level. You're just looking for good prices that are low. Okay, if there's a level before it, you can hold off with that or take a really small position. But generally, overall, you're just letting the market put you where you need to be, because once you get there, you can get a great price, and trading risk averse is very safe for most traders. So thanks for watching, guys. That's today's lesson. Hope that really helps. As I say, if you want to get on board, jump in the description or the bit under the video. Come and have a chat. See you there.